Hi, this is Chuck Hughes. In today's video, I'd like to discuss the monthly buy right strategy, which is a great way to profit during the current market conditions. Now, this strategy does not require a large price move in the underlying stock to produce a good return. And this strategy does well even in flat markets or down markets. So selling monthly call options can provide an excellent income stream and risk-adjusted return. And the monthly buy right trades incur less risk than owning stocks. So the strategy is pretty simple. You purchase a stock and then you sell a 1-month call option. And when the call option expires, you roll it over into the next month. So here's an example of a trade I took recently. This is for the small cap ETF, and my brokerage confirmation shows that I bought the small cap ETF symbol UWM at 43.56, and I sold the February 45 strike call option at 106. So the profit loss analysis below there shows that this trade has a $250 profit per contract potential and would return 5.9% over about a 3-week period, and that has an annualized return of 89%. So this strategy can deliver excellent returns. So I've had real good success with these monthly buy right trades when I trade the ETFs that have a lot of liquidity. Here's an example of a trade I took recently for the financial ETF symbol FAS. Now this is a leveraged ETF. It's very liquid. They're trading on average over 20 million shares a day. So with this ETF, the spread for the stock and the options only about a penny or two. So very liquid, and there's a lot of strike prices available on a monthly basis. So I like to write at the money or slightly out of the money calls, and if the strike prices are in $1 increments, this makes it easy to do. And these monthly buy rights have the potential to deliver about a 5 to 8% monthly return, which can result in a very good annual return. So in this example, I bought the financial ETF at 29.12, and I sold the January 30 strike call option at 109. And the analysis on the bottom there shows that this trade has a profit potential of $197 per contract, a 7% return, and this is about a 2.5-week trade. And annualized, that comes out to about 142%. So again, this strategy, even though it incurs less risk than owning stocks, has the potential to deliver very good annualized returns. And here's another example. This is for the basic materials ETF, and I purchased that ETF at 50.73 and sold the February 52 strike call option at 120. And this trade has a 75% annual return potential. And in all these examples I'm showing you, these ETFs all have strike prices in $1 increments. So if the ETF is trading at $38, you can sell the 39 strike call, or if the ETF is trading at $43, you could sell the 44 strike call. So these are all very liquid and very easy to trade. Now, as I get close to option expiration, I like to use a spread order to roll over the options. And here's an example of a spread order I used yesterday to roll over from the February options to the March options. And this brokerage confirmation shows that I bought to close 28 of the February 45 strike calls and sold to open 28 of the March 49 strike calls. So with this order, I closed out the February calls and sold to open the March calls. And this way I can keep my stock, and I don't have to worry about the stock being called. And when we sell monthly options, it allows us to take full advantage of the time decay characteristics of options. And options, the closer you get to option expiration, the more rapid the time decay. So in the last month prior to expirations, options lose time value very quickly. So if you're short the option, this allows you to profit going into option expiration. Now I make trade recommendations for the monthly buy right strategy through my Inner Circle advisory service, and we're currently trading monthly buy rights for the energy, Dow Jones Industrial, small cap, the basic materials, the financial, and the S&P 500 ETFs. And just to give you an example of the return potential, we've been writing monthly buy rights on the S&P 500 index over the past 7 months, and that's produced a total return of 47%. So that's an excellent return for such a low-risk strategy. If you'd like the current profit results for the Inner Circle, just log on to chuckhughesic.com. This is Chuck Hughes. I want to thank you for listening, and I wish you the best in investing success.